So how many things in the world grow from 0 to 15 trillion in 5 years? That should be a sign that something's going on, right?
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Hey, Dan. All right, so this is part 2. Part 1, we focused mainly on your firms, 1RT and 10T. We also talked a lot about your very impressive background. Today, we're going to be focusing more on like kind of macro situation because there's a ton going on. But okay, so, I've been hearing forever, Bitcoin is digital gold. And I do believe that. But Bitcoin is, down compared to January 1st. Gold is up 25% since January. What's going on here? What is this?
Look, gold to me, and I started a gold business, Gold Bullion International, GBI, sells and stores physical gold. I started trading gold in the 90s at various hedge funds, as you know, amongst many other things, and started that company in 0809. And to me, gold, and especially physical gold, is a hedge within the traditional system. So you've got your 70-30 portfolio or whatever it is. You have your stocks and bonds and real estate and all your different assets. Maybe you have some art. If things start to go wrong a little bit, you have gold as a hedge. Endowments should probably own, 5 to 10%, that kind of thing. It's sort of in this bucket with bonds as well. It has defensive properties, but gold also has many other properties. And this is not a gold conversation, but gold can do well when liquidity is flowing and the market's doing well, or gold can do well when people are nervous about, things changing in the world, geopolitical things, the trade tariff back and forth things. So gold is, I think, actually an asset that is yet to be discovered by institutional investors. And I know that's hard to believe, but I've been in this gold space for a long time. And my guess is that most institutions in the US, certainly, maybe it's less the case for foreigners, don't really own gold. And if they do, it's only, 3 to 5% or something else. So gold is a hedge within the traditional system. To me, Bitcoin is a hedge against everything in the traditional system, including gold, because the denominator is essentially fiat or dollars, right? Dollars and euros. That's the denominator to all assets in the, I call it analog old world, right? So no matter what you own, bonds, stocks, even gold, they're all basically priced in dollars. And if the US government decides that it's going to do a lot of fiscal spending, or the monetary authorities decide they want to devalue the dollar, that entire world of analog assets devalues against Bitcoin. So that's kind of how I see it. The difference. And gold is leading here because especially the Chinese, who are the biggest buyers of gold, people don't realize that I think it's about 60% of total world gold demand is China and India. And then the emerging markets, if you throw them in it, I think the number is around 80-85%. That's the last time I looked at those numbers, which probably hasn't been for at least 5 years. But Americans don't really own gold, generally speaking. So, and they don't need to, because the dollar has been relatively stable and we've had good policy, generally speaking, over the years. But you can see now this gold buying is all foreigners. They are nervous about Trump. I think it's unwarranted. I mean, I'm thrilled that the price of gold is going up. I'm thrilled that GBI's business is, doing well. I think, physical gold and gold itself are still, as I said, assets that are coming into their own. But this is very clearly driven, to me, by Chinese buyers who are panicked about tariffs and what is the U.S. going to do to them, and then what is the Chinese government going to do in response in terms of, are they going to try to devalue their currency? don't forget that the Chinese have a long history over the years of devaluing their currency. I'm talking over the last 100 years. Chinese people who are very patriotic, still, on the one hand, they're patriotic, but on the other hand, like, they remember extreme cases of bad economic conditions, starvation, hunger, not just dealing with a currency devaluation, but Chinese are very sensitive to currency fluctuations. And that's one of the reasons why China tends to keep the Chinese RMB within a broad, stable range. And so I think the population there sees what's going on. They're a little nervous. And then you start getting price action in gold. And then other central banks, as you know, have been diversifying into gold the last few years. And so all of this is just leading the way, right? Bitcoin is doing its own thing. Bitcoin's at 80,000. People forget that in the last 10 to 12 years, gold is actually down 99% against Bitcoin, right? It's just small numbers, right? 12 years ago, Bitcoin was whatever number, $50. And it went from $50 to 80,000. Well, that outperformed. Gold is only up 4x from 08, 09, 4 times. So I know because I'm an owner of both, and my gold position used to be a lot bigger than it is, relatively speaking. So let's not forget that. Bitcoin is a lot more than just digital gold. Let's not even start on that. So I would just say, young guys, be patient. Gold is just, in this specific case, leading the way. But Bitcoin is not far behind to be trading on that thesis. There are many other reasons why Bitcoin still has room to rally. Right?
You did mention that institutional investors in the States, you believe, have very little to no allocation to gold. Why would that be any different for Bitcoin moving forward? Why would they decide, hey, gold is not really for us, but Bitcoin's for us?
Well, that's just another leap. I think that venture investors and growth investors, as opposed to traditional investors. So traditional would be like pension funds, insurance companies, massive pools of capital, the trillions of dollars of U.S. savings that's held privately. That money tends to only seek very simple returns, 5 to 10% a year. Maybe sometimes they'll decide, oh, okay, we'll allocate a small portion to riskier things, like 3% to venture, or 3% to growth equity, or 2% to gold. But it's still very rare. They're looking to have an income, and they don't want to take the risk. Also, those are very bureaucratic institutions. And so, it's a little bit if you're the guy on the investment committee, on the 9-person investment committee that makes the choice to invest in Bitcoin, and okay, yeah, it goes up 10x, but then the 2-year period where it drops 90%, maybe you lose your job. People, the digital asset ecosystem, the digital space, Bitcoin, all the cryptocurrencies, all the companies we've invested in, is still volatile, right? And I think that that's the one thing. Gold is not volatile compared to Bitcoin and digital assets. So you could argue, volatility adjusted, this move we've had in gold has just been tremendous. And if you volatility adjust that to Bitcoin, it kind of tells you that Bitcoin is going to have a tremendous move, which I expect. I think Bitcoin is going up to 180,000 within the year. Maybe not by year end now. It's biding its time. I've always thought it would hold around 100,000. But the gold price should be giving Bitcoiners a high degree of confidence. And it's just that the age in the space, the average age, everyone is so young, and they want, they want the moon right away, when moon and all this other stuff. They also wasted a lot of energy. I find our space is wasting a lot of energy on things, the meme thing, the meme coin thing, I think is valid, but it uses up so much energy. The Trump coin used up a lot of, cash and energy and focus. I'm not saying it's a bad thing. I just think that, there's so many different areas within this digital asset world, stable coins, DeFi, DPIT, AI agents. There's so many things going on. It's just pulling energy away specifically from, let's say, Bitcoin and ETH, which I do think are the two core assets. I know ETH has underperformed recently, but that's another thing where just people are throwing in the towel and the sentiment is the most negative it's ever been. Everything runs on ETH. And, okay, they've given up some of the monetization of ETH, to some of the L2s, and, some of it's been siphoned off, but it's not going anywhere. It's core to the ecosystem. And I think Solana also now is proving to be the third one. I think those three are really they've achieved network effect now. The other ones, Ripple has survived, but it's centralized, and I think it's a different kind of animal. But I would just say, okay, be a little patient. The macro backdrop, which is leading to the price appreciation in gold, will filter over at some point to Bitcoin.
Okay, so speaking of macro, 4 weeks ago is when we spoke for part one of our.
Okay, what did I say back then? Because I'm sure I must have said some things that turned out wrong. I had my dollar view, which has been wrong.
No, we spoke mostly about your background and also 1RT and 10T, your firm, and but tariffs were not even topic of conversation back then. So a lot's happened in 4 weeks. What are your thoughts on tariffs? Is this a calamity? Are we heading into a Great Depression, or is this totally like not a big deal?
I think we're probably seeing the low of panic. Theoretically, I guess the stock market could go down and retest again. But, we priced a lot in at a 60 VIX. I tweeted yesterday that we've only hit 60 on the VIX 5 times in the last 35 years. And those are extremes. Doesn't mean the market can't drop more. I think for the market to continue on its bull run, which I do suspect it will, we really need the Fed to help offset some of this fiscal tightening. And I think, fiscal tightening is Doge coming in and getting rid of whole departments. Fiscal tightening is, the authorities, the administration, Doge, whoever, cutting back spending in areas that they're not completely getting rid of. And then tariffs also are kind of tightening of fiscal policy. So they've attempted probably the largest fiscal tightening, certainly in my lifetime. And at the moment, there's no monetary offset. So, okay, the dollar is weakened, but, it's weakened 10% last few months, but it's really only weakened 5% from where it was a few months ago. So that helps a little bit. That's a little bit of an offset. But the reality is the U.S. economic data is slowing, and I think will continue to slow. And the Fed is behind, and the Fed needs to cut rates. Now, it's not going to cut rates until it sees the whites of its eyes of inflation dropping. But there are many measures of inflation that are low. There are some that have spiked up, but they've spiked up to such a degree, it's sort of out of a fear of tariffs, and to such a degree that I think that it probably curtails growth. So, once again, this policy, the policymakers are not coordinated. If I go in as the Trump administration and I say, we're going to undertake this massive fiscal tightening, you got to get the Fed on board and say, listen, we know what this fiscal tightening is going to do to growth, and we need you to accommodate us. And what happened like a week or two ago, Powell comes out and he says, no, I don't care about that. I care about inflation. Wrong again. Powell's been around a long time. He should be aware of what the impact of the fiscal tightening is going to be. And he should, even if he doesn't want to cut interest rates, he should at least acknowledge and be friendly. This was the genius of the Greenspan Fed, was that a Greenspan would have come out and said, well, we care about inflation, but you know what? This new fiscal tightening, we don't know what this is going to mean. So you know what? Maybe we're not going to be as tight on policy as we thought we would. He was the jawboner extraordinaire. Instead, we had this guy, Powell, who was a private equity guy initially. Of course, now he's been at the Fed a long time. And look, it's hard to be disrespectful. I mean, he's a brilliant guy. But this is a mistake, this lack of coordination. You want to take on a world-changing policy like this, you have the Fed at least support you behind you. Now, what did we see? The European Central Bank cut rates yesterday. We've seen China stimulate because their economy has been deflating. And, I think Trump has walked back a little bit of his aggressiveness. So that's what a VIX at 60 gets you, right? But where's Powell? I mean, we don't need a 4% interest rate in the short rate. I know they're concerned about 10 years, but get the short rate down to 2%. So the 10-year is at 4%, and then everyone can ride down the yield curve. And, that's normally what happens in periods of slow growth. And the reality is, being a policymaker, being a central banker, there's some risk involved. Okay. Is there risk that if you take rates from 4 to 2, that inflation is going to rear its head in the midst of us doing the greatest fiscal tightening basically ever? No. But there's some risk. Okay, well, you've got to take that risk so that our markets don't completely implode. That's my personal view. And so I think that they will relent. I think 2-year notes, which were 4.25, are down to 380. I think they should be down in the 2s. And we just need some monetary offset. And that will also take the dollar down, probably down another 10%. And that will also help. So I just think, what we're doing, what the administration is doing on the fiscal side is it's incredible. No one's even attempted to get us into budget balance. Just think about that. Finally, a government that has a long-term plan, a long-term focus, that cares about the long-term health of the economy, of the country. It's fantastic. But I don't think you take on that kind of dramatic revolutionary policy without having everyone on board. And I think Trump, despite being very aggressive in his tone often, mentioned the other day that he will seek to remove Powell. I don't know what the right solution is, but I don't want to say he's not wrong, but I don't think the Fed's posture is the right one. So I give you a long-winded thing there, but I'm a crypto guy, crypto blockchain guy. It's all I do all day, every day, literally, for the past 5 years. But I can't lose my macro hat. It just doesn't go away.
Of course. All right. So when Trump was elected, within tech and crypto circles, we were thinking, okay, 2025 is going to be a great year for M&A. There's going to be IPOs. Markets are back on. With tariffs now, is that all?
No, that's still going to happen. It's just delayed a little bit.
Like to 26, 27 or?
No, I think 3 to 4 months. I don't think Trump, once he starts seeing the data, the unemployment rate should start going up. I've been wrong and early about this. I suspect, I expected the unemployment rate to be going up more by this point, but it hasn't. I think now it will start to go up. Growth will slow. I think Trump will soften a little bit, but behind the scenes, they're going to be very focused on getting budget to balance. Besant, my guess is that's his goal. That's his focus. That will be his legacy. If he is able to bring us to balance, that will be a phenomenal legacy. Imagine being the Treasury Secretary of the United States that was actually able to bring us into balance. I mean, it's phenomenal. So, and I think it's a worthy goal. So I just think, the IPOs that I'm expecting from some of the companies in our portfolio, ones that have announced already, Circle, eToro. There's rumors, of course, about Kraken and Gemini, Figure. These are all companies we own. I mean, it's just probably delayed a few months, 3 months, 4 months, 5 months, definitely not a year. I think once uncertainty is removed a little bit, the market doesn't have to be making all-time highs. Bitcoin at 80 or 100,000 is a very high number. I mean, the space is booming. Forget about the day-to-day on Twitter where, some guy talks about his bags not being pumped and all that jargon, right? And he's leaving the space because his altcoin went to zero. Yeah, I think it's delayed. That's all.
Makes sense. Is there a sector within crypto? Because previously you named AI, DePIN, et cetera, all these different subsectors. Is there a specific subsector that you think is very underappreciated right now within crypto?
I hate to think about it that way because I think the whole space is underappreciated. It only has $3 or $4 trillion of value in it. The old world has $800 trillion. So I would say the whole space is underappreciated. But I think one important development, and look, I'm a market guy, I'm a financial guy. I did not come from Silicon Valley, the technology part. I think the stable coins have really proved out a very important use case here. And I love Nick Carter's presentation that he did at Singapore 2049, showing, I don't know if you saw that or if you were there, just sort of the emerging market needs and demand for dollar stable coins. It's just and he's done other stuff on it too. He's a brilliant young guy. But I think, look, last year, I read last night, I think the number's moving around, but $15 trillion of stable coins. I think that was the volume. I don't know if that was the amount that was settled or the volume last year. It's more than MasterCard and Visa. Now, I know many people look at these numbers differently and they say, oh, well, you have to adjust it. Okay, so it's 10 trillion. Even if it's 8 trillion, it's a huge number. And the digitization of currency is happening. Now, what is a bigger trend than that? Bitcoin is the core collateral of the space. Proof of work algorithm and its decentralized nature makes it pristine collateral that no one can touch. And I think ETH and Solana are more in the programmable, realm and have different uses than Bitcoin. But stable coins have the ability to help the traditional world port over some of their value without having to make a decision about Bitcoin or ETH or Solana. And also look, these fiat currencies are a lot more stable, right? A lot less volatile, and they're used more easily in payments. So if I'm a guy sitting in Nigeria and I've got my savings in Naira, which devalues 50% every year or whatever, oh my goodness, stable coins, this is a lifeline. I can't get a bank account. So I have a digital wallet. I've got my Kraken account and I'm holding dollar stable coins. I mean, how difficult is it to understand that this is that's a life-changing type of event for people? We as Americans or Europeans, everyone is wealthy and, wealthy in comparison. We don't think about these things. We just go to our bank account and we have our money there and we have a credit card or whatever it is, we Venmo or PayPal. But it's just shocking to me, you say underappreciated, right? How is it that concept, which is really simple, no one has to understand how blockchains work, no one has to understand what the proof of work algorithm is or read the Satoshi white paper or try to figure out how Ethereum works. There's none of that. This is a really simple concept vis-a-vis stablecoins. So I think, simplicity is so important. We own Circle. which it's 8% of my third fund. And, Circle is sort of the regulated US centric stablecoin producer. We love Circle. We love their relationship with Coinbase. We love Coinbase too. I think that what we're going to see now, I do believe Trump has said he wants to make the US the crypto blockchain capital of the world. So I mean, it's smart for so many reasons. Like, I don't think we have long enough time in this call to get into why it's so smart. But one very clear reason why it's smart is that we want those people in Nigeria and all around the world using the digital dollar as their method of savings. Now, if they feel the dollar is going to be devalued because fiat gets devalued, then in a nanosecond, they can switch to Bitcoin. And then, you know what? If their Bitcoin doubles and they say, you know what? I've maintained purchasing power. I actually now need to spend it, and it's not easy to spend the Bitcoin. And you know what? I want some stability. I don't want to have to deal with 10% daily moves in Bitcoin. That's still a big problem. People in the space don't understand that for the traditional world, the volatility is what keeps a lot of them out. Gold is not volatile. Okay, gold is a good store of value. Gold is not volatile. So this stable coin use case, I think, has definitely been proven. I think there are going to be many businesses that pop up around it. It won't just be Tether and Circle. I think the trading volume was going to be hundreds and hundreds of trillions. So, I mean, the fiat currency markets trade $7 trillion per day. I don't see why stable coins can't trade $7 trillion per day. And they did 15 trillion last year. So if I'm a young person and I'm thinking, okay, what's the future? How do I want to spend the next 10 years? I'm interested in financial markets. I'm interested in trading. I love this whole dynamic, value. How does value get stored? How does it get saved? And I say to myself, well, stable coins traded 50 trillion last year. All traditional currencies traded 7 trillion a year. I'm sorry, 7 trillion a day. Wouldn't it make sense to go to a business where you have that much wind at your back, that much potential growth? I mean, every 30, 28-year-old kid should be figuring out how to go work for a stablecoin business. I mean, I'm exaggerating a little bit. Okay. But this has moved out of the realm of venture. Now, understand this. 4 years ago, stablecoin volume was zero, essentially. In 2019, 2020, okay, 5 years, zero. There were no stablecoins. So how many things in the world grow from zero to 15 trillion in 5 years? That should be a sign that something's going on, right? So, to me, I think that's a very exciting area, and I'm looking to get more exposure in that area, but only in the more developed companies. I mean, I know there are a lot of little projects, and the companies we invest in, generally, I like to see 40 to 50 million in revenue already. And there just aren't a lot of stablecoin businesses generating that kind of revenue, but there will be.
Definitely. So with regulation coming in and with the traditional asset managers and TradFi wanting exposure, do you expect there to be lots of consolidation within crypto asset management businesses? Like, could you foresee 1RT or 10T getting acquired by BlackRock or something like that? Or do you think it's going to be, these?
I think that some of the M&A that's going to happen will be between the businesses. I think the larger crypto businesses, public or private, like we saw Kraken purchase NinjaTrader, uh, larger crypto businesses that are making a lot of money, they will buy smaller crypto businesses. I think that some of the giant people like BlackRock, I mean, I think they have, did they purchase Securitize? Or I think they have some percentage that they own. I think tokenization, of course, that's another thing we don't have time to talk about today. But I think the bigger traditional guys, I don't think they're coming in and like buying Coinbase. I don't think they have enough money for that. But I think that's all happening in the next 3-4 years.
Amazing. All right, Dan, it is time for the closing questions.
Okay. All right.
Alrighty, what is the best advice you've ever received?
In reality, no one ever gives you any explicit advice. Very few people I've been, let's say, 30-year career. Very few people sit you down and say, this is what you should do. I've had some mentors along the way who have imparted, of course, words of wisdom and subtly. But I'll tell you, great piece of advice from a guy I worked for in 1995, very successful fund manager, a guy named Michael Steinhardt, comes to mind because the advice he imparted was always in the form of sort of a joke. And I'll never forget, I came into him with an idea. The funniest thing was, there's a trade idea that was proposed to me by Gary Cohn. Gary, eventually became, I guess, the head of Goldman Sachs and everything. But in 1995, he was the head of the metals area. And they proposed, Goldman did to us, and it was Gary. And I remember talking to him about it to be, I think it was long or short copper. I couldn't remember. So I went in and I did all this research, and I was like, and Gary Cohn at Goldman likes it too. And he was older than me. I was a younger guy at the time. And I wrote this whole research report up, and I brought it into Steinhardt. And I said, yeah, I think we should, whatever it was, go long copper. And he looks at this thing and he's like, and he reads it. This is very, very intelligent man. And of course, very successful. And he says to me, he says, Dan, these are words. He says, these are just words. These are words. And he used to get very animated and he would yell. He's like, I don't want any words. And he picked up the paper I'd given him. I'd spent weeks doing it, crumpled it up, and he threw it at me. And he started yelling, I don't want effing words. I need conviction. He says, do I buy or do I sell? I need conviction. I don't need words. And that was a lesson to me, a very important lesson, because simplicity in explanation was really something very important that I learned at that moment and has been important in my career. And I think one of the reasons that I've been able to make this transition from the old world into crypto blockchain world is because I'm able to explain things that are happening in our world very simply to investors and people in the old world. And it's because it's about editing and really getting to the true essence of what the opportunity is. And so, I don't know if that's a piece of advice, but that was an experience I went through.
I love it.
And to this day, if I get something from an analyst that's nothing, I just say, look, those are just words. Like, I don't know what to do with those. Those are words. What do you want me to do?
That's amazing.
Investor, it takes a very long time, I found, to develop as a skill. And if you've never been an investor before, you can't just wake up one morning and take it up. If you've been a banker for 15 years, I don't know. It's very, very difficult. If you've been a CEO, there are unique individuals who can do that, but it just, without the mentoring and the experience, and also the experience of having failed a lot, you have to fail a lot to get to a place of skill and success. But you have to fail in a way that is not lethal, right? So you can fail in little bits lots of times, but you can never have a truly large fail. And so you learn that when you're trading a portfolio 24/5.
All right. You've been in the space for a number of years. Looking back, what is the biggest thing that you've changed your mind about within crypto?
I can tell you where I've been most disappointed that I didn't expect. There are too many rogue individuals in the space, who are morally problematic. And I think we have to, I don't know how we weed them out. It's a terrible thing. I mean, look, it's the flip side of being in an area where there are pioneers. We're all moving west, and it's circa 1840. And, that was a rough and tumble place to move. You had to go across country. You're in a wagon and you're sifting for gold or whatever in 1848 and 1849 and, California. And those people wanted to do whatever they could. There are a lot of ne'er-do-wells. And I think the big problem, people say, well, I would have thought Bitcoin and crypto would have been adopted by now. Me too. But the problem is that every few years we have a gigantic fraud, but it doesn't change the fact that there are still the quality of the people in the space. Some of them are geniuses. It's fantastic. But there's a percent, and it's not a small percent, that just are bad actors. And that's one of the reasons why I think the way the US can become the crypto blockchain capital of the world is to help facilitate that the larger, more successful, legitimate companies go public. Once they go through the diligence required to be on the NYSE or NASDAQ, they're legitimate. And their businesses, they're revenue producing. There's no pump and dump. There's no rug pull. There's no, there's none of that. I think that is the single biggest hurdle that we face in this space, is how do we root out some of the bad actors? And I don't just mean bad actors in the sense of guys who are doing hacks or this and that. It's that mindset of, I'm going to launch a token. We're going to sell, on the initial, when it freely trades, and we're going to crush all of our, community. How does that make any sense? You need to encourage your investors. You need to support them. You need to, be long-term thinking. Like, I think it's that, I think credibility. I'm disappointed at how many, people's just outlook is just not the outlook that I think is good for a long-term sustainable situation. But if we can get 20, 30, 40 of the companies and projects, we can get them public, they have a stamp of approval, then the institutional money can come in, the bigger money, and they can invest with those people because they're credible. And then those people will then be the ones who are pushing us forward, as opposed to, I don't know, the way it is now. It's really a free-for-all. Thank goodness I'm not a venture capitalist. I have no idea how they make decisions, but I respect those guys tremendously. I could never, we try to stay away from venture at every turn. Can you imagine doing a pre-seed token deal? How does that even work? How do you even do the analysis? I mean, they do, and some of them are very successful. But I'm not coming at this space from that angle. I'm coming at it from the other end.
Love that. All right. What is a piece of content, whether it be a blog, a book, a podcast, etc., that had a major impact on you?
So there are a lot of them, but I was talking last night with one of my investors. He's a guy in his late 80s, believe it or not. He's my single oldest investor, very successful guy. And he sent me a opinion piece that George Gilder had written in the journal yesterday. And then I was reminded that his book, The Microcosm, that was published in 1989, that book was absolutely like mind-bogglingly, mind-boggling, opened up my whole universe. It's essentially the history of the semiconductor business, how our world moved from the analog to the digital. And he is a guy that is so brilliant. He writes so simply. I would recommend many of his books. I mean, I have many books. I was super academic in my youth. But that one just popped into my head because I had a conversation last night about it.
And sorry, could you say the name of the book one more time?
It's called Microcosm
Microcosm. Okay.
by George Gilder.
Awesome. All right, Dan, last question.
That was the last one.
No, this is the last one. How do you define success, and do you feel like you've achieved it?
Well, again, that's such a personal question. Every person will answer this differently. I think achieving the balance that you sort of have sought and that you sought over, the early or middle part of your life is success. And balance just means that, all the various parts of your life have reached a certain place that you are happy about and that they all are in balance. And I fight for that balance. I tend to want to be, maybe a little more focused in some ways on my work and on what I'm doing, at that moment. I'm extremely focused now on my 4 funds, and we're launching this 5th one. And I don't really want to focus on anything else. Those macro questions you asked me in the beginning, I mean, I'm aware of macro developments, but the reality is that, I fight for that balance, between family and health and lifestyle. And so, I don't know, maybe you never achieve that, but I feel like I have actually achieved some nice balance.
Amazing. Awesome. Dan, thank you so much. This has been stellar. Where can people learn more about yourself and learn more about 1RT and 10T?
Yeah, I mean, as you know, on X, it's DTapTap, and on LinkedIn, Dan Tapiero, and, 1RT and 10T have websites, and you just put it into Google and it's all there. And soon, I don't think it'll be Google anymore. It's going to be this AI. I've been playing around with the AI stuff, and it's just mind-boggling. But that's for another day. We'll leave it at that.
Amazing. Thank you, Dan.